First of all, welcome everybody, and my name is Lunn of Daily Fintech Advisors, and this is a hub with 7 different countries represented. So we've got 7 different countries here, and so it's about the globalization of fintech. Or as we like to say, bits don't stop at borders. And yes, there's a huge amount of activity happening here in London, and a lot of the startups that are doing things here in London are addressing big global markets around the world, and so therefore they will be going to the countries that are represented here on the panel. So I'm going to start off and just introduce Samarth from Germany, Don is from Holland, Boris is from Switzerland, Wim is from Brussels, and Nicolas is from Luxembourg, and Janos is from right on the end is from Hong Kong, and Jorge is from Mexico. So welcome everybody to the panel, and if you could give the panel a quick rousing cheer. Thank you. So I'm going to start off and ask everybody from the panel to introduce themselves, starting this way around. So we'll start with Samarth, and we'll say a bit about what they're doing in their country and what makes their hub, their country, special and different. To try and figure out the one thing that you want to take away and say, if I'm going to, in this case, Germany, what should I be thinking about? So over to Samarth.
Great. Thanks, Bernard. I'm from Fintech Forum, Germany. We started off in 2013 with about 100 startups identified at that time. We had around 60 million in funding in that year, and we've grown to over $1 billion in funding last year with almost 400 startups in the region. We've basically been involved both with events and offline, trying to help startups connect to investors, financial institutions, and corporates. We would think of Germany as a surprise element in fintech. It, first of all, doesn't seem to have a hub which people keep looking for. But on the other hand, it makes things even more interesting because there's a lot of intermingling of e-commerce, technology, software, so corporate software, and so on. That's what I would highlight about Germany. Please.
So my name is Don. I'm the founder of Holland Fintech, fintech hub based in Amsterdam, which is already quite renowned for its payments institutions, which have quite a global reach. And I think if you would like to summarize very easily what's going on there, is that basically we see that everything facilitating trades is actually going very well based in the Netherlands. But the funny part is that basically Holland Fintech, even though it's quite a Dutch name, doesn't really limit itself to the borders of the Netherlands, because we're an independent institute working with member companies, quite similar to Innovate Finance. And I think that's also where the special part is, why people should connect to our network, is rather that they would like to get further connected, which doesn't necessarily is limited to Amsterdam or the Netherlands, even though it's a great city and you should definitely come.
My name is Boris. I serve on the board of the Swiss Finance and Technology Association. We're based in both Zurich and Geneva, and the very role of our association is to represent the ecosystem. I think what is really unique about the Swiss model, I guess, is the actual Swissness in itself. Switzerland is a very special country. It's got languages, currencies, as a matter of fact. It does have a number of different cities which are financial centers, and the complexity of the offering ranging from technology, the research base linked to the universities, and the obviously banks and insurance companies in the area. The idea of the association is the one of providing primarily a platform for the different stakeholders in a very Swiss way, trying to organize and consolidate the type of debate, so to foster the ecosystem.
My name is Wim. Eggsplore is based in Brussels. Most people know that is in Belgium these days, and actually that's a very small country, as you well know, so we took a slightly different take on building our hub. We didn't really start from the local fintech community, but decided, given that the founders of the organization are both people that used to sell software to large companies, corporations, started from the other side and were federated a number of large banks, European banks, but also organizations like Euroclear and Swift into a partnership model. And we're trying to provide the fintech companies that are dealing with us, both local but also foreign, access to market and facilitate their partnerships with those large corporations for their go-to-market in Europe.
Hi there, my name is Nicolas Mackel. I'm the CEO of Luxembourg for Finance, which is a public-private partnership, the agency, in fact, that helps develop the Luxembourg Financial Center. Luxembourg has been reconfirmed last week by the Global Financial Center Index as the #1 financial center in the Eurozone, and that makes it, in fact, the #2 in the European Union, right after London, quite a distance after London, but still after London. What makes Luxembourg stand apart? Well, it's the Europeanness of Luxembourg. Luxembourg really is the ideal platform from where to tap into not only one country, but several countries at a time. Multilinguality is one of our features. You can talk to the regulator in French, German, or English, according to whatever you want to choose. And then you've seen here today are featured several startups from either Germany, Belgium, or France. They come to Luxembourg for its Europeanness and for its very exciting environment in innovation.
Hi, I'm Jorge Ortiz, president of Fintech Mexico. Fintech Mexico is a non-for-profit organization. We are privately funded. We are structured in 5 committees: regulation, education, technology, networking, and research. We have over 100 members. And one thing to remember or to think of Mexico, besides the tequila that everybody knows, is that we are the largest Spanish-speaking country in the world. We are almost 130 million persons. So to develop fintech for the Spanish-speaking market, you have to be in Mexico. Also, the demographics, I think, are amazing to develop fintech because we have one of the youngest population in the world. Our average age is 28 years old. The use of mobiles, we have almost 110 million lines. Of those, over 70% are smartphones. So with a young population and the use of mobiles that is good, I think there is a lot of opportunity for fintech. And then think of this is kind of a sad number, but for fintech it's great. We're the 2nd worst country in Latin America in financial inclusion. So there is a lot of opportunity for fintech companies.
I'm Janos, I'm the founder of Fintech Hong Kong. Hong Kong is the gateway to China, China being the world's biggest fintech market, hands down, anywhere in the world. If you want to put numbers, Alibaba and Financial did a Series A round. They're valued at 50 billion for a Series A. Hong Kong being a gateway, it also means fintech companies trying to scale in and out of China. Waele currently closed in Hong Kong in January, 160 million US. Microcredit closed last week, 75 million US. All of these companies have headquartered in Hong Kong with operation in China. Hong Kong is not just a gateway to China, it's also a super connector for Asia. Within 5-hour flight of Hong Kong, you can reach half of the unbanked population around the world. You can reach 60% of the world middle class. And this is within one of the cities which is the most connected anywhere in the world. So this is the background of Hong Kong.
Great, thank you, Janos. The next question is, what was the single biggest hurdle that you faced in building your hub? And Samarth, we can start. And just before I ask the panel that question, I just want to pick up on one thing that Samarth mentioned, which is something one thinks differently about here in London, because in London, in the UK, kind of everything flows through London. London is definitely the hub for the UK, and there are spokes, obviously, but it is. But some other countries are not like that, and I think Germany is not like that. Switzerland, in my experience, is not like that. In Switzerland, you can go to Zurich, you can go to Geneva. They're both major financial centers in their own right. So, and the same thing in Germany. You can go to Frankfurt, and there's lots happening there. You can go to Berlin, you can go to Munich, you can go to Hamburg. It's a much more federal structure. So just bear that in mind when you're looking at these markets. It is not like the UK and London in that respect. So, Samarth.
So I would say the hurdle was also the opportunity, and it remains the opportunity. It was actually the fact that There is no single place where you have all the financial institutions, the startups, the VCs, no. And even today, if you try to map whether by the number of startups or at least by the amount of funding going to different regions in Germany, you would get answers which are totally contradictory. So last year, for example, Hamburg actually got the most funding simply driven by Creditec. Second largest would actually be Düsseldorf, which is, again, nobody wonders if that's a fintech hub. So there is actually very little by way of hurdle in terms of something stopping you, but the opportunity is in connecting a lot of the dots which are otherwise not connected through our events or even through offline introductions, because we see a lot of things going on in the different parts of the country, but they should know somebody who's doing something on those lines or somebody who's investing in that or partnering in that. So, apart from that, maybe regulation. I would say the jury is out on that, and we've had some pleasant surprises in the last 12 months in terms of getting a bank license. Some guys applied parallelly in the BaFin and an FCA. They actually ended up getting it in the BaFin faster, so I'm not very sure how that works. That would be a regulatory, regulation would be a hurdle in any case at almost any hub. So that's right.
But isn't it also the case that basically you don't necessarily need to live in a city to have a fintech startup, right? Or basically start a technology company. So I think that basically we're of course looking for this one point of entry, but in most cases they're just scattered all over the country. And that's what we're seeing in the Netherlands as well. For example, there are a lot of fintech companies based in Amsterdam, but just as many are not based in Amsterdam, but still would like to be connected. So we see there's a big need actually to get everyone together, may it be in events, may it be through all kinds of other connections, also in the virtual world. And that's basically where we needed to start as well, basically to at least make sure everyone can find each other, to make sure everyone can do business. Because the financial supply chain altogether is becoming pretty complex from a technology perspective. And people are really struggling to find their way in there. And I think that's where one of the biggest topics that we needed to cover first, to actually have people understand the whole range of services that could range up from front-end financial services delivery up until basically back-end systems on which different financial platforms could live. And so that was a big start. And for the rest, I think I agree with you, but I think that's more of a general European problem that regulators are slow to catch on in general. And so are the rest of the governments to figure out actually more about the digital world and try to cover this, basically live on this opportunity that's out there. Yeah.
Boris?
For us, mostly, has been a challenge to establish the right type of partnerships and coordination model. Being a country very diverse with lots of independence in the different centers, different solutions being created locally, and yet it been very difficult, given the lack, if you like, of a top-down approach to try to establish a Swiss approach to the fintech ecosystem. So obviously the idea of coordination across different initiatives and trying to establish an ecosystem orchestration that can effectively work was for us important, and that required a slightly different model than the one that we could observe being established in other leading fintech hubs.
I think our challenge was, to a certain extent, a bit similar. As I said, we started from the demand side, so to speak, the big banks, organizations that are actually looking for fintech solutions or are either to go to market with or to as a supplier. And you can easily set up or entice companies like that to set up their own accelerator or to go it on their own in those strategy, to actually get them together to endorse a common structure, a platform where you can exchange ideas with not only ideas but also actually implement projects with fintech companies. That was the challenge. But we were guided by companies like Swift and Euroclear who've done that in the past, and we put in a structure, I think, that now works and where you can get results.
I think for us it was in relatively the same terms as for some of the previous speakers. Probably the single biggest impediment was to get the incumbents to understand that this was not a threat to them, but rather an opportunity, or at least a way for them to become more efficient and to simply also to save money. That we have. Sorry, the mic apparently has an issue. So for us, it was more about getting the incumbents to understand that this was not a threat to them, the whole fintech phenomenon, that digitalization of financial services was something that was going to happen. It took some time for them to realize. Maybe one factor that makes Luxembourg stand apart in that is because a lot of the banks or asset managers that are located in Luxembourg are entities which belong to a larger group, but they have come to realize that first of all they shouldn't wait until innovation trickles down from the top, but they look at how they can actually find innovation bottom up locally, and that is where we now stand.
So for us, the structuring of the association was really easy, and it got traction really, really well, very quickly. But some of the things, one of the burdens that we found is that nobody has really hard data on how the fintech industry in Mexico or in Latin America. So we need the hard data in order to start convincing the authorities, the regulatory bodies that we are formed as an industry and that we have power also for integrate collaborations, like for instance for consultancy institutions. We also need to justify the market. So that was one of the burdens. So we started working on making, and we are still working on developing those papers. And I'm glad to announce that today the University of Cambridge and the University of Chicago just released a report on Latin America in which Fintech Mexico was the only Latin America organization to collaborate with them as a hub in Fintech. So I guess it's already public, so it should be around, and it's also from the university from the UK and the US.
When you look at the development of fintech in Hong Kong, Hong Kong is a free market economy, it's a liberal place, and as a result it's organized chaos. And this meant that when Fintech HK was created, we were a directory for the events, a directory for the startups, because you need to make sense of this grassroots approach of startups emerging left and right. Now, on the policy level, at the government level, Hong Kong is also Asia's financial center. Hong Kong is a brand, Hong Kong is powerful, and as a result, if you put the gear of the government behind fintech, it has to take time. It has to make sure that this is aligned with the interests of Asia's largest financial center. It has to be aligned with the interests of China's gateway. So there was obviously a lag in time from the liberal approach of the ecosystem growing and having to sort themselves out, and then the government coming behind. But now, happily to announce that the Hong Kong government, as of, last month in the latest budget speech, had the regulator to create a contact point, had the budget to have now a trade body which is here to draw fintech companies to come over, not just in Asia, come over headquartered in Hong Kong to scale across the region and also look at Hong Kong from a China perspective. So Hong Kong, much more different than here in the sense that it was not immediately trade body focused. It was very much grassroots, and then the government followed up about a year and a half, 2 years later.
Well, thank you, everybody. And I just want to make one comment and then go on to the next question. And the one comment is that in talking to the 7 different hubs, it's very clear there's not one size fits all model. There's many different ways of building a fintech hub, many different business models for it, so lots of different ways of doing it. And my next question is going to be around the subject of regulation, but very specific to Bitcoin. And this is a little bit of a softball for Switzerland, which I happen to live in, because some time ago I was at a conference in Switzerland and somebody said, well, of course, Switzerland is a multi-currency country. And I was like, what? Multi-currency? Because you think it's multilingual, it's multi-this, it's multi-that, but it's multi-currency because back in about the 1930s, a currency was set up called the WIR, the VIR. Now, hardly anybody uses it, but it is legal currency in Switzerland. And so because of that law, Bitcoin is actually legal currency in Switzerland. And that by itself is interesting. You don't have to make any regulatory changes. It's just multiple currencies are allowed. So with that, introduction, I'd like to get everybody to talk about how they are seeing Bitcoin regulation in their country and what's happening. Samarth, do you have any?
From what I understand right now, we've had about a year and a half back the first, so to speak, experiment with using Bitcoin with a licensed bank, which is Fedor. Thereafter, there have been a lot of companies which are exploring the technologies to connect blockchain to financial services, but also on the smart contract side. In terms of regulation, we've not, frankly, to put it very simply, first of all, the regulation for fintech is still a couple of years behind. When you look at Germany, I would say Bitcoin, give it another couple of years. I have not seen anything which is saying, okay, we understand what is going on, we have a sandbox, or we are playing with it, and we would say it's legal, not legal, or this is how you can use it. No. So we are a bit far behind on the Bitcoin legislation.
So things are actually moving quite well. We see our central bank experimenting with cryptocurrency, their own cryptocurrency basically, and they're very well diving into this whole evolvement, where of course usually they find blockchain developments more interesting than Bitcoin itself, but they're seeing a lot of potential in this. And for example, we have a lot of Bitcoin companies that are actually gathered together in a separate trade body to represent themselves towards the regulators and the government, with I think around 12 companies and growing in there, which is actually going quite well. So I think for consumers and businesses, actually very accessible at the moment.
I think the Swiss case was well presented. I think there is an interesting starting point here. What has been observed over the last 2 or 3 years has been rather the creation of specific clusters, especially around the Zug area, a number of important US-based or Europe-based startups relocate into the area. In addition to this, obviously also the startup community essentially created their own association to facilitate the process with respect to the digital finance compliance. And this is obviously an area where probably some of the additional work with respect to regulatory aspect will be important, so to facilitate the way in which startup, without the resources to, for example, engage lawyers or professionals, might understanding which way to operate in a system that is by itself fairly simple and as a result of this relatively easy to operate in.
We focus most of our attention not on the Belgian regulator, but on the European Commission, which has a huge impact on Europe in general. Maybe not here anymore in a couple of months, but in generally speaking, the European Commission is of paramount importance, and we're focusing also primarily on 2 areas that haven't been mentioned yet, but it's to do with data privacy, because data-driven businesses are really what drives the industry, in my opinion, now in technology in general, and on security related to that. So we're trying to build a good gateway to the European Commission to have their regulators understand what fintech companies need.
Well, Luxembourg has been interested in virtual currencies, not Bitcoin as such only, but virtual currencies for at least the last 3 years. Our regulator, faithful to its very defining openness to innovation, had issued in February 2014 a press release whereby it acknowledged virtual currencies as being money and indicated that anybody dealing in money had to be regulated. If you want to know what part or what area of regulation exactly you will fall under, come and talk to us. That is what the Luxembourg regulator always does. It's open for business, it's open for discussion. We heard today about the UK regulator being very amenable to dialogue. That is what the Luxembourg regulator also is. And it has, in the meantime, for instance, granted a European payment license to a Silicon Valley startup called SnapSwap. Others are in the pipeline, so you will hear more about Luxembourg in this space soon.
So I think in Mexico we have a few Bitcoin companies. So the central bank is starting to analyze what is going to be their position going forward trading Bitcoin. But also in Mexico, there is a big preoccupation about money laundering, because we have a lot of concern about the drug traffic, and that provokes a lot of money laundering. So the authorities think that perhaps Bitcoin could be a way to foster money laundering. So they will be concerned a lot with anti-money laundering.
I think in the context of Hong Kong, when you see China, which is the world's largest miner in the world, and you have capital control in the context of China, Bitcoin as a currency is a very hot topic. Not so much for the Hong Kong regulator, but mainly for the Chinese regulator, because they want to control this capital outflow from going out of China. Hong Kong, from a currency perspective, I don't think, as my knowledge is, that the regulators see this as a currency. It's an asset. And as a result, you have a lot of fintech companies using Bitcoin to do remittance across Southeast Asia region, and mainly the Hong Kong-Philippine corridor is very, very strong. A lot of Australian companies are actually headquartering themselves in Hong Kong for that reason. And then from a currency perspective, from a clearing perspective, there's a Hong Kong company called Gatecoin. They're the largest exchange in Hong Kong, but it's the second largest exchange in Europe. And they've cleared over 1.4 billion last year, but they're actually Hong Kong based. So Hong Kong, from a regulatory standpoint, tends to always be technology neutral, and therefore this allows technology to grow because they don't try to frame you too quickly in.
Great, thank you. I'd like to make one comment before we go into the next question, and the comment is simply that regulators and governments also face competition. Because I know it's a lot of startups in the room and we face competition every single day, but so do the regulators, because the regulators are seeing that the right regulatory environment does create innovation and does create wealth, and they want to do it. It's a very hard job because you get it wrong and you get scams and so on, but there is competition amongst regulators, and regulators around the world are starting to listen. So I've got one other question, and it comes from a comment made by a guy called Paul Graham. I don't know if you know who he is. He was the founder of Y Combinator, which is probably the most successful accelerator ever, based out of Silicon Valley. And he was asked back in 2006, what does it take to create a technology hub? And he wasn't talking about fintech hubs, he just said a technology hub. In other words, how could you recreate Silicon Valley? And his answer was very simple. You need nerds and rich people, and everybody else will follow. My question is not so much about how do you get the nerds and the rich people, but how do you get the other people to follow? And the number he picked, and it was a number really picked out of thin air, like kind of 10,000 hours, was 10,000 people. You need 10,000 of the right talented people to move, and then you've got a great hub. So 10,000 people moving, when he was talking about it, was just within America. He used the example of moving from Silicon Valley to Buffalo, and if they moved from Silicon Valley to Buffalo, then Buffalo would be the next Silicon Valley. But that was easy because it's one country. No borders, no immigration, no issues around that. How do you deal with the question of being a talent magnet, of attracting those 10,000 people from wherever they might be in the world into your country, dealing with questions around immigration and other such like that? Samarth, do you want to kick that one off?
Yeah, I think the way it worked for Silicon Valley and the kind of perfect set of events that happened to create that, I think 3 years back when we were just starting off Fintech, I don't think we were starting off with the aim of being able to set up a Silicon Valley. I don't think that's a practical ambition for any hub right now to that extent. The biggest starting point, in my opinion, is a set of startups and repeat entrepreneurs who can then go on to create more startups, pull in more funding, and I would say, not at the cost of arguing with Mr. Graham, but the fact that if you have a startup right now in Europe, I think the funding is not so difficult to get from other parts of Europe or even from outside. So it somewhat changes, in my opinion, a bit, because Fintech at the same time is also very, it tends to be verticalized. We have seen, even in Europe, while there are a lot of regional hubs, but there is a lot which is going on in verticals which need to be connected with each other. So for example, in payments or asset and wealth management and so on. And somehow it's, I would say it's something like you need the nerds and you need the rich people who understand those nerds is becoming more important.
Yes, I fully agree. I think with your statement, Samarth, it's about basically different levels of education that you need to bring in. So it's on one hand bringing people together to actually have them together understand what's going on. And it's just about showing the example very regularly, right? So probably also here in the room there are some people that were perhaps less familiar with fintech before they came today than they are at the end of today. And that's already helping out to basically get people enthusiastic. Because in the end, to get supply and demand together, everybody needs to understand the other side. And so to be able to use technology, you need to understand what's possible. Otherwise, you come into the Henry Ford discussion where he said, if I would have asked people what they've wanted, they would have said faster horses instead of cars. And so the same goes for technology here, where you need to understand a bit about it to be able to implement it good. And I think that's where also the biggest challenge lies with, for example, regulators or existing financial institutions who don't necessarily have a love for technology altogether. And I think that's where the biggest hurdle is. We just need to teach people about the love for technology. And I'm very glad actually that in our network that's catching on with a couple of thousand people in the network and more than 200 companies that are actually becoming enthusiastic about this and helping to broadcast this as well.
Great. Thank you.
I could actually subscribe this. This is obviously important, and the geeks as well as the investors and the people with the money are. But I think there is obviously an element of making the place also an attractive place where to live. I think the issue of immigration, which has been mentioned, is quite important. Each of the successful entrepreneurial ecosystem are really attractive places where you could actually have a really interesting quality of life and very exciting people, well beyond the specific sectorial aspect where you'll be operating. So I think from a maybe policy point of view, systems that want to be attractive ecosystem and be able to attract the right type of talent need also to consider soft aspect linked to the ease of conducting business as well as the quality of life that one could essentially spend in that location. And immigration, restriction of barriers are obviously at times very detrimental to a specific ambition of a place to be located as a central hub in any specific sectorial aspect.
I personally think, I mean, Silicon Valley people are very smart, but they're also very Silicon Valley centric, right? And a fintech company, for me, a successful growth company, could very well have its sales and marketing based out of London, development in Estonia, customer support in Brussels because it's a bilingual environment, and another sales and marketing office in Paris. And as such, I don't really believe in the model anymore where everything is centralized or in one particular region, except for some exceptions. There are places like London and Silicon Valley that have real critical mass. But for us to play that card wouldn't be smart. We look for those companies that are following the strategy that I just described.
And I think that is a strategy that Bernard described in one of his articles recently, actually, I think even talking about Luxembourg, didn't you? Luxembourg, in fact, is a nice example of how immigration can help a country. Luxembourg is made up of more than 45% non-Luxembourgers. And on top of that, there are a third of the workforce commutes in every day from the neighboring countries, France, Germany, and Belgium. So, for instance, the result of this is that our university is ranked among the most international universities in the world. That is how you can get international talent to cooperate and create synergies. Now, anybody in this room who thinks now and laughs about there not being enough space in Luxembourg, don't you worry. The city of Luxembourg only takes up 2% of the territory of the Grand Duchy, so there's plenty of space there.
Well, to attract people, as I said at the beginning, we are the largest Spanish-speaking country and market, so immigration is happening now. Chilean, Colombian, Peruvian companies are moving to Mexico, fintech companies are moving to Mexico, because they see the potential on hitting the Mexican market. So besides that, we also, the labor force is cheap and is well educated. We graduate more than 120,000 engineers a year. So you can find a lot of labor really well qualified.
It's, America is great because it's a self-selected nation. It's people who moved over to America because of the war, because of hunger, because of economic reason. And I think, from a Hong Kong perspective, Hong Kong is also a self-selected nation. The people which moved to Hong Kong when Hong Kong was created, 25 years of Hong Kong, or 50 years ago, Hong Kong was a fisherman village. Hong Kong now is Asia's largest financial center. In 25 years, they built a financial expertise that no other hubs in the world has. In terms of fintech, maybe at the beginning when you introduced me and saying, is he from Hong Kong? Yes, I am, in the sense that I'm living there. I was not an expat, I was an economic migrant going over to Hong Kong to create something. And this is the case of a lot of the mainland Chinese who came over to Hong Kong. It's a lot of case of the European, the American, which are going to Hong Kong because they're seeking new opportunities. And what we're talking about is what makes a great fintech hub is not necessarily financial capital, it's human capital. Is the education grassroots, it takes me a long time to get this one right, but universities that grow you for over 10 years. Is also all the bankers which are coming over to that country to bring in that knowledge and then slowly kickstarts. But human capital is really the key. I mean, we call it immigration, but really it is self-selected nation of entrepreneurs who slowly are here to break the ice and then people follow them.
One of the themes that I've been hearing out of today is we're moving a little bit more from the startup phase to the scale-up phase. And in the startup phase, we all know, getting from minimum viable product to product market fit is very hard. There's a chasm there. But actually, there is another chasm, which is you already got that, you've got product market fit, you're scaling, and now you've got to get to an IPO or to an exit. There's got to be some real money at the end of the table for the people who bet on it, whether it's the entrepreneurs who bet 5 to 10 years of their lives or the investors who bet alongside them. And so a general question to anybody who wants to pick up is what are you doing either to attract fintech scale-ups to your environment or to help them go past the sort of early stage into the late stage and the scale-up?
I didn't use the word scale up, but the whole mechanism we're trying to put into place is actually give that access to market to those kind of companies. I think scaling up is about access to market. There you need to really look at a global market, and you need to, I think for a large percentage of the scale up, at least the ones that we focus on, go for a go-to-market strategy in which you try to make the financial services industry your ally and not your opponent. And that's essentially the philosophy we're trying to implement. It doesn't work for everybody, but it certainly works for a lot of them. Yeah.
I think also it would be good to mention basically sort of SME tech companies. Right, so we see startups are pretty hot, so everyone's looking at sort of, let's say, both ends of the spectrum. Very early stage companies, potential to grow, and large corporations, so everyone can find those. But if you look into the middle, and you might include scale-ups there, but I see a lot of actually longer existing IT companies doing some really neat stuff also in the fintech space, which are kind of out of scope because it's such a big group, which is kind of fuzzy and still everyone just calls it IT. But it's really sort of a forgotten area where I see a lot of interesting stuff happening at the moment.
I would say most of the startups in our community, not more than 2 to 5% would be at a stage where they are looking for global or really IPO stage growth, which means, and of course the guys who are already there, they really don't need a fintech ecosystem to support them. We are seeing actually, or we are trying to focus a bit more on, let's say, the guys who attended our 2013 event. How can we help them at least get out of Germany and expand into the continental European market? The easiest step in some cases where there is a vertical angle to get into the US or the UK based market, but frankly I don't think we are as a team focusing so much on the stage which you're talking about. That's the sort of target, but this year, next year, no. It's much more of the guys who are coming up, the Series A, Series B.
I've got a follow-on question for Samarth particularly, if that's okay. because one of the better exits that I've seen in fintech is a company called 360T, which is out of Frankfurt. If you guys don't know it, they're in the foreign exchange for corporates. And I think they had an exit, it was 700 million?
750, yeah.
750, I don't know if that was euros or dollars, but they're pretty similar these days. Could you tell us anything about, does that sort of create more in the ecosystem? Are those guys going to be creating new ventures? Does that money flow back into the ecosystem, or anything about what made that a successful exit?
Absolutely. I would take that, then a couple of other exits in the payment space. That was Klarna and Sofort AG, that was back 2 years ago. I think with all of these are the best examples for startups who are whether early or in the middle stage, to see that this is not just something in the thin air. This is tangible, and it's possible to create world-class big companies without being too much in that Silicon Valley style marketing kind of thing. So as I would say, some sort of fintech hidden champions. That's what I would say, and I think a lot of the companies which have done this are either becoming, so the CEOs or the founders who are coming out of that, or even co-founders, are business angels now, creating a sort of perfect storm and snowball effect which we love to have.